This is a video looking at a recent reverse merger in the over-the-counter market. It's a cannabis stock. The new symbol will be CANL, and the name of the company is CannLabs Incorporated. First, the disclaimer: this is not legal or investment advice. You want to seek competent advice from qualified attorneys and investment advisors, but the more you know about finance and business, the more you can profit. On Friday, June 13th, CannLabs announced its reverse merger with SpeedSport Branding, a public company whose symbol is SDSPD. The public company SpeedSport Branding was a development company, a small motorsports organization that participated in road racing. SpeedSport showed almost $100,000 in shareholders' equity and a small loss on $22,000 in revenue for the last quarter. It was split off in exchange for the cancellation of stock. SpeedSport Branding changed its name to CannLabs Inc. CannLabs swapped out SpeedSport Branding and got back 111 million shares, leaving it with 65 million shares out. CannLabs will trade on the over-the-counter bulletin board market under the SDSPD symbol until about July 10th, when this new symbol will be CANL. Now, CannLabs acquired Carbon Bond Holdings, a leading cannabis testing lab, and it became a wholly owned subsidiary. CannLabs acquired Carbon Bond for 59 million shares. CannLabs sold 500,000 shares of Series A Convertible Preferred for $500,000 and issued 5-year warrants to purchase 20 million shares of stock at common stock at 15 cents. The investor will also lend $750,000 in 3 tranches over a period of months. CannLabs agreed to file an SEC registration statement covering the resale of the common stock underlying the Series A Convertible Preferred and the warrants. Of the stock outstanding now, pre-conversion, 87.8% held by the new shareholders, 9.5% by the old pre-merger shareholders. Another 30 million shares can be issued to the Series A preferred stock on conversion at a conversion price of 0.01664, another 20 million shares if the warrants are exercised at 15 cents. This compares very nicely with the closing price of $1.38, but the preferred stock and the warrants are limited in their conversions to about 5% of the outstanding, which can be increased to just under 10%. On Friday, June 13th, as I said, the stock closed up at $1.38, up 369%. 110,000 shares were traded. OTC short report, for which I write a blog, shows that 82,000 of this stock was sold short, or 74%, very high percentage. But presumably much of this short was from market makers forced to meet demand after the news hit. Cannabis is hot in the over-the-counter market, so hot the SEC issued a warning to investors in May. Despite this warning, adding the stock from the warrants and the convertible preferred to the outstanding stock and valuing it at $1.38 gives a market cap of $147 million. If the investor can convert the preferred into common and sell at $1.38, it turns its $500,000 into over $41 million. Throw in a full conversion of the warrants at $1.38 and you get another $24 million for total proceeds of $66 million. Some risks apply, but the investor breaks even on its $500,000 if it converts and sells at 2 cents per share. Now, you can read more about reverse mergers by buying my book, How to Pick Hot Reverse Merger Penny Stocks, on Amazon. You can subscribe to my blogs, reverse-merger-shell.com or reverse-merger.info. Questions, just email me, john.lux@securities-law.info. Here's my phone number. I'm a securities lawyer who has experience as an investment banker and market maker. And you can also buy my book, How to Find a Home Run Stock, on Amazon. Thanks for watching. Have a good day.